Good morning, everybody. Mike Tedeschi over at Perspective Wealth Planning with this week's market breakdown video. This is, of course, a holiday shortened trading week, so I'd like to wish everybody a happy Thanksgiving. I'm going to make the video pretty short, but there are a couple of very key points that we do need to discuss here today. So, first off, let's take a look here at the S&P 500. Now, one of the things that we talked about last week was the potential for us to see a little bit of a rollover here based on the fact that we were trading right around that 10-day moving average and look like we might break down based on the MACD as well as the potential for that RSI to dip underneath of that 70 zone. Now, one of the things that we really need to talk about with technical analysis is follow through is, of course, key. Just because something is leaning on a moving average of support or looks like it might cross over doesn't mean you're going to get a massive sell-off or a massive move in any direction. You need to, of course, see follow-through. And when we talked about a breakout to all-time highs a month back, we talked about we needed to see follow-through to the upside. We didn't want it to, break out for a couple of days and then turn back underneath of that zone. And certainly what we have seen is we've seen follow-through now since that breakout at the end of October. It's been essentially a month of just upward grind higher. All the moving averages are lined up correctly here on the S&P 500. When we back things out from a daily chart and look at it on a weekly time frame, guys, and this is important to do, we're still not at that 70 RSI level, so we could see some more upside before we would get into those overbought conditions. The MACD still looks strong. Now, when we made the original breakout a month ago, I put a target on the S&P, and I'll put that back up here on this chart for you guys to see. Our first target right around that 3240 zone. We're still about 100 points away from there. It would not surprise me to see us continue to grind up towards that target. As we did talk about last week, holiday shortened trading weeks typically tend to see bullish drift higher. That is what we have seen in the past. And in fact, if we looked at last year's Thanksgiving week, we come back in here in on the S&P 500. Our Thanksgiving week was right here. I'll circle it for you guys. So we had a big drift here to the upside. We did ultimately turn down after that point in time, but for that week, even though the market itself had not been necessarily behaving great for about a month before that, we did see that upward bias drift. And of course, that's what we have seen here this week. Now we take a look in at the Nasdaq here. Same thing. Got that beautiful drift higher, and you can see we did dip underneath that 70 RSI, but we're back up above it. The MACD is crossed back over. The histogram really didn't push down too much into negative territory, and we've continued to drift higher. And if you wanted to look at the upside target from that breakout there on the Nasdaq, we get about that 8680 zone in there on the Nasdaq. Now, as we look at the Dow Jones here, strong action, same as the other two indexes that we just looked at. Target is up at about that 29,300 level in there on the Dow Jones for this particular breakout. It's that first target, so we're continuing to watch that drift higher. Now, the biggest story this week, of course, has been the Russell. We have talked about this for quite some time as this 1620 level being that major key important level. We watched 1, 2, 3, 4, 5 or 6 failed attempts to break out of that zone here over the last 2 years. And for the first time this year, we actually have a new high, a 52-week high on the Russell here. And we are over that 1620 level. Now we're barely over it, and this is where follow through is absolutely key. So again, we have a low volume trading week where we typically tend to have a bullish drift higher, and we have broken above that level. Does this hold here? That is the big question. If we hold over this 1620 level through the end of next week and continue that drift higher, that's a very bullish sign. That next target really, again, the next resistance zone is really up at about that 1720 level, and then it's that all-time high. So there is definitely some room for the Russell to continue to push higher by another 6%, so to speak, as long as we hold over the 1620 level. This is going to be the area I'm going to pay the most attention to here over the next couple of weeks because, again, I think if we do stay above this level, that is the market telling us something. We finally have participation from the mid and small caps. They're breaking over a major key level and starting to to move up with the rest of the indexes properly. And that would be all of the index would be moving up. And we talked about this last week. The Russell didn't have its moving averages aligned correctly. It now does. The 10 is over the 20, which is over the 50, which is over the 200. And that is the first time that we have seen that now for quite some time. So again, we've got bullish time frame alignment on the moving averages. We're above that 1620 level. The only thing that's really holding me back from going, this is absolutely fantastic, is the fact that this happened on a low volume drift week. And so we have to see if there is going to be follow through going into next week. Last thing I want to take a look at here in today's video for you guys, like I said, I would keep it pretty short. I do think it's important to take a look back at the Nasdaq McClellan Summation Index. We talked about this last week as we started to get that crossover to the downside, and we talked about two things. We said this was a bad level for us to fail at, and it certainly is. If we don't get over this level, we would be failing right at resistance, and you'd get that move back down that we have had the last couple of times it's pulled up into that zone. But I said the other thing that could happen, and I thought there was a decent shot of it happening, was we could get a cross back over and continue to push up. And I highlighted this zone right here as a good example of that. Right? We had a crossover, and then it pulled back, and then boom. And this is just the inverse of that. So here's that crossover, pulls back, and then we could get that boom here to the upside. So again, the important level really is to see if can it get back up over that 300 zone. We do have that bullish crossover as of yesterday. Will that hold as well? Again, we're not over that resistance level, and this did happen in that low volume kind of holiday trading week. So, you could cross back under it and kind of push below. So the two major things to pay attention to going into next week is the Nasdaq breadth single at that 300 level, and of course, can the Russell hold over that 1620 level? I'll have that analysis for you guys next week. Lastly, guys, if you have any questions, you want to reach out to me, feel free to give me a call at the office at 814-580-9881 or email me at mtedeschi@perspectivewealthplanning.